you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. Well, it looks like we cleared up our internet issue. I changed a little bit of the settings on the kbps and moved my hub for the internet to broadcast closer to my computer. Seems to have remedied the situation. There were some flooding in my area which had caused a lot of damage in town, so I'm assuming that had something to do with it. So back to the charts. So we are still beneath this 0.5 upwards path of the pitch fan level, so we are at on this mean reversion path to the upside. We are still beneath the discount region as we make our ascent here, and we are currently oscillating between the 0.786 and the 1 level of the bearish trend base fib extension level. Yet again, since Wednesday we've been in this consolidation phase. Are we going to go up beyond this point? It looks like we just hit the liquidity pool that we outlined for the last 2 days at that 27,458 level, but I'm jumping the gun. We'll get there in a second. So yeah, in this Coinbase chart, we are just oscillating between the 786 and the 1 yet again. So let's go into high block capital as we do each and every day. What is high block capital? Where it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and then we get to see where those crispy characters got burnt. So let's do that now as we go into the 1 minute time frame. We're about to lose this drop here from last week, so it's good timing that we can see our character over here at the 27482 level that we outlined for the last 2 or 3 days. Well, it's actually been quite longer than that, but we talked about how they rounded bottoms pulled these characters into a stacked region, and this is why we went up to that region to take this character out.
Fatality.
And yes, that is how they reclaim the money for people who don't pay themselves and hope for 15K and stuff like that. So it looks like we still have our stacked regions up above here. Are we going to reclaim them as we lose them to Father Time, lest we forget that there is some up at 28,313 and beyond? So we need to expand our vision to the higher time frames of the external pools of liquidity using this toggleable level of the heat map here. So we're going to go straight to the 7-day, and we see that there is on the 7-day time frame more shorts induced than longs, which is why we are starting to make a stab up to the upside as suggested on the live the last few days. So coming up to these regions at 28K could be on the table on the 7-day time frame. It implies that is the case. If we go to the 1 month time frame, we were talking about yesterday how there is some upside double digits liquidity pools on the way up to 29K. So is this going to be a stab that we make to the upside? Is it going to continue? There are more double digits regions up in the 29, 3, 4, 5, 6, all the way up to 30K region. There are some thick pools down here at 24K, but in less fashion. So the monthly subtle imbalance is to the upside on the monthly time frame. So the 7-day and the 1 month is imbalanced to the upside. And if we go to the 3 and the 6, we'll notice, as we have been for the last month and a half, that there is this large amount of pools below at $150 billion, now coming to 160 or 70 billion. Are we going to stab off this and create some divergence at some point? It is something that we've had on the table for some time now, and wondering if they're going to ever come back to it. All right, so if we go to the 6 month, we also notice that down at the 22.5 region, we have that large $100 billion sitting there as well. So if we start to make those lower lows, then this could be on the table as well. However, when you start to juxtapose this to the yearly time frame, it all starts to fade to aquamarine and lets you know of the liquidity pools resting above at 32.4, $135 billion, 77 at 32.8, 104 at 33.2, 84 at 33.6, 82 at 34 even, and you have this path of double digits leading the way up to 34K if we can get above 30,000. So if we can get above these pools, the path to the upside is laid out for you, even though we have this large amount of pools down below. It seems very ambiguous in terms of where it wants to go on this yearly time frame. So let's just zoom in and try to find out what's immediately above and below here, shall we? So on the 25.2 region from the price tag, we have $106 billion down here at 25.2, 112 at 24.8. Definitely more tantalizing to come down here from the current price action than it is to go up to here. You do have 37 billion at 28.8 and 37 billion at 29.2. So you do have these pools forming, and 83 billion at 30,004. So on the yearly time frame in this immediate zone, just zooming in, we are more interested in taking this out than going up. In the longer term time frame, I am seeing that we could go up to the take out the pools above. It just would be more interesting to me personally. We did get this bounce off of the 706 region of the internal impulse here to the upside. So let's go into the Binance chart and just start to build a narrative from where we were and throw on our oscillators. So here we go, heads up display on, Momentum Master, link in the description. This is the oscillators we are using, momentummaster.info. Scroll down to features and toggle at your leisure all the components or a single component and read about it. So what were we seeing the other day to justify this move? Well, we were looking at the 15-minute time frame and we saw the curvature of the cloud here. So yesterday we were live about this time and we were seeing it drop down. We said we could come down to the 618 and bounce, but you would ideally look for divergence. We did get that divergence crystal printed on here. So you would have been able to see the divergence print on Momentum Master B, and that gave us the cloud shift idea, and it wasn't a coincidence. This coincided with London Open, then we got this move to the upside. So that played out to a T, and this is why the curvature of the cloud can kind of preempt the shift and advance. So that's pretty interesting to note. It did play out as projected. So let's go into where we are currently. So we're getting a 5 time frames oversold alert that you would receive to your phone. If you were not on the live, you would get this set and forget alert system on an ever-changing text message using the stochastic array. And so this stochastic array is the multiple time frames oversold and overbought idea. So you did get that close on the 15-minute time frame here, showing that you have the 5, the 15, the hourly, the 4-hour, and most likely others in an oversold status. All right, so let's start our descent through the time frames. We're going to be able to juxtapose how the 5-day and the daily reset alongside the weekly. So this is why we decided to go live at this time. I think we'll do the weekend streams on this morning time, my time, because it's more convenient as I do have time off. So let's go into the weekly really quick so we can make our descent through the time frames. Okay, so the weekly time frame had this cross down event since May 1st, and we've been seeing this steady suppression of the price action from this cross down event on the baselines. What are the baselines? Well, they are your first sign of reversal. They are one of the few leading moving averages you will find on the market, and that's why they occur before the event occurs. So it's something to note, and the suppression is real until you can get above that baseline level and start to create a narrative beyond that point. So when we were bullish, we had the baselines closing beneath the price action above the baselines. Here we're getting the price action beneath the baselines as you see that suppression on the weekly time frame occur. One thing to note, which is potentially bullish, is the cloud getting this volume increase as we go up here, suggesting that we are getting interest of volume entering the asset on this 1, 2, 3, 4, 5, 6, 7 weeks of retrace idea. This retrace in 7 weeks time was not as massive as this 3-week retrace, which is interesting to note. This 3 weeks of retrace gave you a 22% retrace idea, and as of this moment in time we are seeing a retrace of 15%, and we have rebounded off of that and essentially ranged for 3 weeks at that time. So are we starting to make this ascent out of here on the weekly time frame? If we look at our oscillators, the one thing to note is the cross down event on the Williams indicator, which can be creating double tops, and we went over yesterday how this happened before, and we created this surge up here in this retrace zone before we took off in September of 2020. So this cross down event could get negated and create double triple top scenarios. It doesn't always need to come down completely. However, you do need to note when these do cross down, they do cross down with a suppression fervor. Whoops. With a, well, what am I doing? Sorry about that. So they crossed down with a large amount of suppression at that time, which is why the weekly time frame got suppressed here in 2021. Times are different though. We are not necessarily at the beginnings of a bull run just yet. So will this be a suppression event that occurs to continue? If we look at the stochastic RSI, it has reset quite a lot. Hi there, buddy. You want to see what's going on? You want to say hi? My son's saying hello. So yeah, this is the money flow is beneath the RSI here. We like to see when the money flow, in conversely speaking, when the money flow gets above the RSI, it tends to come back to it. And then when you get the money flow beneath the RSI, you get this gravitation of the money flow